To clearly understand the concepts of supply and demand, you will need to know that price move because of imbalances between buyers and sellers. Remember that in our introduction course, we said that supply and demand areas are traded well according to trend. Okay? We want to see our supply zone happening in a downtrend and our demand zone happening during an uptrend. Okay, so what involves a supply zone is a formation that we call a drop base drop. Okay, so we want to see a drop base drop formation. Okay, in the case of the demand zone, for it to be a good demand zone, we want to see a rally base rally. We want to see a rally base rally. Okay, we've just said that we want our supply zones to be formed in a down trend, while the demand zone to be formed in an up trend. So with a simple illustration, I'm going to illustrate how a supply zone is formed and how a demand zone is formed. Remember, we have just said that this one forms in a downtrend. So let us say we have a drop. Okay, so this one is a drop and it is forming in a downtrend. When price reaches here, we expect a consolidation. Okay, so we expect a consolidation. In this consolidation, we said that the price will form a range. Okay, a range of buyers and sellers. Okay, it will form a range. In this range, the price is at equilibrium, that neither the buyers nor the sellers are in a position to either break this high or this low. Okay, but in this case, we expect the price to gain some good bearish momentum to break through that support, create this imbalance, come up and test this now has turned into a resistance and drop. Okay, so in this case scenario, this was a drop, this one now is a base. The base in this case is now our consolidation. Okay, good. So what forms this move is something we called a what? An imbalance. Okay, so this one is an imbalance. The imbalance is also created by an inefficiency in the markets. Okay, so remember that we had said that market movements are created by efficiencies and inefficiencies in the market. In this case scenario, in this consolidation, when the strength of buyers and sellers are equal, it is an efficient market. But once this imbalance, some will call it fair value gaps, okay, is created, this one is an inefficiency. And because the market has to move efficiently, it must come back to do what? To retest this area. Okay, after the retest in this area, the market is likely to drop to the direction that it was moving, which was a downtrend. Okay, in this case, where do we find our entries? We find our entries in this now the supply zone. So this is where we place our entries around here, so that we may capitalize on this move downward. Okay, so we have just said that the price is likely to cause a fill of this inefficiency before the market drops. So in this case, this is a very good supply zone. Okay, this is a very good supply zone, and in a supply zone we expect to take some sell trades. Good. So the inverse is true when it comes to the demand zones. We said that the demand zones are created by Rayleigh Bayes rally. Okay, so in this case we find that the price is in an uptrend. Okay, the price is in a rally, in an uptrend. On reaching here, we expect that the price will hit a consolidation area, and in this consolidation area there is a perfect balance between buyers and sellers. All right, so we expect further bullish momentum here. So here we find a base, and the base is characterized by consolidation in price, where the equilibrium in momentum between buyers and sellers is equal. If the price will gain some good bullish momentum, we will pierce through this temporary resistance, come back to retest now this support area, and go to our previous direction, which was an uptrend. Okay, so we can clearly see that in the markets this was the imbalance. Okay, the imbalance creating an inefficiency in the market. And because we said that the market will strive always to be efficient, we expect that the price will come back to fill this inefficiency, retest this area, and then go up, creating higher highs and higher lows. In this case scenario, our entries are expected to be around this place after the retest of that zone. So here, this one is now our demand. This one is now our demand zone. Okay, so these two illustrations illustrate the formation of a demand zone and a supply zone. So as I have rightly said, the demand zone is simply a fresh area where the buyers now have overwhelmed the sellers, causing this upward, a sharp upward move. Okay, while in the supply zone, we can see that this is a fresh area where the sellers have previously overwhelmed the buyers, and now this one leads to a sharp drop in price. Okay, remember, the best supply and demand zones are areas that are untested before, meaning that the price has not yet returned to these zones before. It returns once and then drops, returns to these zones once and then goes higher and higher. Okay, please note that the stronger the move away from this zone, the stronger the imbalance, the stronger the imbalance. Okay, this increases the likelihood of a reaction when price will reverse to our entries. Okay, so the best supply and demand zones will be characterized by very strong imbalances at that level. Okay, so in this supply and demand course, we are going to look at around 10 subtopics so as to help you understand supply and demand better apply them in your charts, and gain consistent income from that knowledge. Okay, so we are simply going to look at what is and what is not a demand zone. Most of the times you will find someone saying that this is a supply zone, and yet it is not. Okay, secondly, we are going to look at the logic behind a supply and a demand zone. Third, we are going to look at the different type of zones. Fourth, we will look at the structure of the formation of these zones in depth. Okay? Fifth, we are going to study how to trade the supply zones. You can clearly see that here I said that our entries should be here, and here our entries should be here. We are going to look at the best places to take our entries, our stop losses, and where to put our take profits. Okay? Sixth, we are going to look at the proper and the correct way of drawing our supply and demand zones. Okay? Number 7, we are going to look at the best time frames for us to trade supply and demand. Okay? 8, we are going to look at what qualifies a zone to either be a supply zone or a demand zone. Okay? Last but not least, we are going to look at the confirmation trading using supply and demand zones. And lastly, we are going to now go to my favorite part, the set and forget trading using supply and demand zones. After having said that, we will now proceed further to look at what is and what is not a supply zone. Okay, so if you have taken this illustration, we will go and look at what is and what is not, what does not qualify to be a supply or a demand zone. Okay, so the qualification of a zone. Okay, so a common misconception among traders is that supply and demand zones are just highs and lows of prices. Okay, you'll find that when the price will come up here, you'll find that someone says that this one is a supply zone, and when the price will come there, you'll find someone saying that this one now it is demand zone. No, what we are saying is that supply and demand zones are not just simply highs and lows of price. You see, every candle that you see in your charts, they represent supply and demand zones. But a true supply and demand zone is very different. How is it different? A valid supply and demand zone will show a very strong imbalance, okay? Meaning that price will move away from those zones aggressively, okay? So if this has to be a very true supply zone, then the price must create a very strong imbalance out of that zone, retest that zone. So this zone must be, first it must create a very strong imbalance, okay? Secondly, it must be a fresh area, meaning that it is untested. So we expect that this price will test this zone, and then we get a drop. All right. In this case, for a demand zone to be true, we need to see a very strong imbalance, an upward move, followed by a fill of that same imbalance, a retest, and a strong move up. So this is what can qualify this to be a true demand zone. Okay, good. So note that this indicates that institutions and large market participants have just stepped in, creating a significant shift in supply and demand. So you will find here, this one is called by large commercial banks, okay, and some hedge funds. People who have millions of dollars in their pockets to significantly shift the markets, okay? Please note that a weak move away from these zones will suggest that there isn't enough buying and selling pressure to make this zone a significant supply or demand zone. Up to there, is there any question on the qualifications? What makes a supply zone a good place to sell or a demand zone a good place to buy? Yeah, remember, mapping out these two zones, the supply and the demand zones, we do not cut through candles. We do not cut through candles. We don't cut through candles. These are very important points. When marking our supply and demand zones, we do not cut through candles. Okay? So you see, every supply and demand zone has two key elements. It has two key elements. The first element is called a basin. Okay, and the second element is called now the move away, a strong fast move away. Okay, a strong fast move away. Remember, most of the time the basing, this one, the basing, this one is what is called a basing, and this one is called a basing, is always described as consolidation, the consolidation area. Okay, so this is what separates the supply and demand from just simple support and resistance level, the basin and the strong move aways. Okay, you see, like support and resistance level, which focus on just general price areas. Supply and demand zones require specific candle formations to confirm the presence of this large institution buying and selling pressures. Okay, good. You see, the supply zone here and the demand zone here are not intentionally created by these banks and hedge funds, but they do leave clear footprints on our charts. They leave clear evidence of their action or their footprints that we as retail traders, me and you, can follow to know that this one is a supply and this one is a demand zones. Okay, good. Remember that I've said that these zones form because large players like commercial banks and hedge funds, they have millions of dollars and they generate explosive moves that define now these imbalances. Okay, they create market inefficiencies. Okay, and I said that this involves the formation of basins and this strong moves away. Okay, so in this zone the basin formation will begin when price is in equilibrium, meaning that the price is in a range. The price is in a range. There is a balance between buyers and sellers, leading to an equilibrium. All right. Next, after the retest of this zone, we expect this strong move away. Okay. You see, price ranges happen when buyers and sellers are fighting for the control of this equilibrium zone. Remember, we said that this is a basin zone whereby we find some equilibrium. So here you will find that price is in a somewhat range, okay, where buyers and sellers are fighting for control of these zones. Okay, so what follows a range is a breakout. Okay, so the breakout will happen because of this imbalance. All right, this is the second part in forming of a supply zone and a demand zone. Okay, so in a demand zone you will find that the buyers here have exhausted the sellers and the price will break out. So this is where the price breaks out of this area from a rally down. Okay, they break out of this zone and comes to retest and then shoots in the direction of the initial trend. The supply zone is the exact opposite of the demand zone. Okay, here the sellers will exhaust the buyers, they will absorb them, and price will break out because of this imbalance. Okay, and the price will come here to retest this zone, and the price will continue to the desired direction, which was a downtrend. Okay, so this is the footprint left on the charts by the large players, showing where the big players took control of the markets. Okay, good. The third point, after now the range, we had the range, the breakouts, and then the third is the retest at this demand zone, or the retest at this supply zone. So what happens on the retest? Okay, so here you will confirm that the price will move fast away from this zone because of the imbalance that we have just said. Okay, here in the demand zone you will find that many buyers will buy that price. This will cause the price to shoot up, leaving unfilled orders. The imbalance here will leave unfilled orders there. What this will cause is that the market is supposed to come back, fill these orders, then retest this area, and the price will move up and up. Okay, so at this place, this is whereby the banks and the large players are objectively buying and accumulating positions for their buy orders. Okay, good. And since there was a very fast move away, we have said there were unfilled orders that were left here. So here we are trying to get into this second move where banks and large players have left over buy orders that they want to get filled that couldn't be filled before. Okay, So basically, this is the illustration of the supply and the demand zones. Remember, we said that there are types of supply and demand zones. Okay? There are those that will happen at the extreme tops and bottoms, and there are those supply and demand areas that will happen in the middle of the price ranges. Okay, so we are going to rub this and look at the types of supply and demand zones. Okay, so basically there are two types. The first type is those that appear like valleys and peaks. Okay, and the second type of supply and demand zone are called continuation zones. Continuation zones, they are like what we had already looked at. They form drop base drop patterns and rally base rally patterns. Okay, the valleys and the peaks, they form patterns like the drop base rally and the rally base drop. Okay, so look keenly, we have two types of patterns here: the drop base rally and the rally base drop. Okay, good. So just to start with the valleys and peaks, we say that these type of zones are found at the extreme tops and bottoms of price movements. Okay, so the valleys and the peaks, they form clear swing points where price strongly reverses. Okay, so you will find that if this is the extreme high and this is the extreme low, you will find rally base drop. Okay, rally base drop here. And if this is our supply now, this is our supply zone, and this is our demand zone in this case. So here you will find drop base rally. Okay, you will find drop base rally patterns in this case. That is why we were saying that the valleys and peaks are found at the tops and bottoms of price movements, and this forms reversal patterns. Okay, good. So just to look at the second, the continuation zones, these are the drop base drop and the rally base rallies. The drop base drop will appear like this. We will find a drop in price, you will find a base and then a drop. Okay, drop base drop. And in this case of rally, you will find a rally base rally. Okay, a rally base rally. So these are the two types of zones that you'll find in the markets as supply and demand zones. Okay, so continuation patterns indicate a pause of momentum. Here you'll find a pause of momentum. Okay, good. Rather than a reverse of price. Here there is a reverse of price. Here there is a reverse of price. So the pause here indicates these are continuation patterns and these ones are reversal patterns. So these two types of formations describes the two types of supply and demand patterns that we find in the markets. Okay, any questions about this? None? Good. So in the next session, we are going to look at the structure of a demand and a supply zone so that you can correctly identify them when you see them. Okay, so I'm going to wrap this and look at now the structure of a demand zone and the structure of a supply zone. Okay, we are now going to look at the structure. Now going to look at the structure. Please pay very keen attention here, because if you correctly identify the structure, you will be in a position to correctly draw them in your charts and take positions that are high probability positions. Okay, so for each supply and demand zone, there are two key levels. All right, so there are two key levels. And the first level is called a proximal line. The second one is a distal line. The proximal line and a distal line. Okay, good. So the proximal line and the distal line, they will form boundaries of your supply and demand zones. So this one will form boundaries of your supply and demand zones. Okay, to start with, let us discuss demand. Okay, let us discuss a demand zone. Okay, so if we are drawing our demand zone like this, okay, remember here we said some consolidation. Let us say it is a rally formation. Okay, the upper line of the demand zone now is always called the proximal line. The proximal line. Okay, the lower line of a demand zone is called the distal line. Okay, here now the boundary between the proximal line and the distal line is what we refer as a demand zone. Okay, good. So this proximal line is placed at the top of the body or the wick of this basing structure, representing the closing level where now the buyers will take control and initiate a very strong move up. Is that clear? Good. So when we come to look at the distal line, you will see that it will form at the lowest wick, okay, of the basing candles, so that it marks the farthest point where buyers absorbed the selling pressure. They absorbed this liquidity. They absorbed the buying pressure before the price launched upwards, okay, making higher highs and higher lows. All right, good. So if you get this, you are clearly going to mark your demand zones correctly. The proximal line is the upper line and the distal line is the lowest line. Okay, for a supply zone, it is the exact opposite. The supply zone. Okay, so you are having your supply zone like this. This one is the consolidation phase, the range. Okay, so this one is the base. This one is the base. Okay, now in this case, the upper line is the distal line. The lower line is the proximal line. What lies here between these two lines is the supply zone. Okay, good. So the distal line is placed at the highest wick of the basing of this basing candle. This marks the farthest point sellers defended the price before it dropped aggressively, forming what? Lower highs and lower lows. Okay? While this proximal line is set at the bottom of the body or the wick of that basing structure, identifying the nearest level where the selling pressure overwhelmed the buyers, therefore forming a downtrend. All right, good. So the distance between the distal line and the proximal line in this case will form a supply zone. Okay, this is all about the structure of your zones, the supply and demand zone. I know that this is technical stuff. We have reached to the end of our study course today on the supply and demand zones. In the next session, we are going to look at how we are going to use the supply and demand zone for our trade entries, how we place our stop losses in this case where we are using these zones, and our take profits. If you are watching this from YouTube, please consider to subscribe to this channel, like this video, share it with your fellow traders